If you're looking into the world of financial services, you've probably wondered how people really make a living. It's not always just a simple salary. Today, we're going to pull back the curtain on the huge difference between earning a quick income versus building real, long-term wealth. Honestly, understanding this one thing from the get-go can make all the difference.
All right, so let's start with something you hear all the time: contract levels. People throw around big numbers: 70, 80, even 90%. And yeah, it sounds amazing, but the number that really matters is what that percentage is actually of. That's where the story gets interesting. So, this is the question you have to ask. If someone says they're on an 80% contract, you have to wonder, 80% of what exactly? Because the answer to that simple question reveals a massive difference in how much money you actually take home. It's such a simple idea, but it gets lost in all the industry talk. I mean, at the end of the day, you can't pay your mortgage with a percentage, right? What really matters are the dollars that actually hit your bank account. So let's focus on that. Okay, let's break this down with a super simple example. Let's say a client has a policy with a $100 monthly premium. Over a year, that adds up to $1,200. That $1,200 is what we call the annual target premium, and that's the number your commission is based on.
So check this out. You can see how those contract levels turn into real money. At a 40% contract on that premium, you make $480. But jump up to 80% and suddenly you're at $960. That's literally double the income for the exact same policy. And that really gets to the heart of it. We're talking about the same client, the same policy, and the exact same amount of work. The only thing that changes how much you earn is the compensation structure of the platform you're with. Okay, so that was a small case. But what happens when we scale this up a bit? Let's take a bigger, $500 monthly premium. That works out to a $6,000 annual target. And now that's the number your commission is based on. With a policy this size, the difference really starts to jump out. At a 40% level, you earn $2,400. But at 80%, that's $4,800. Again, the work didn't change, but your income just doubled, all because of the model. And hey, this idea doesn't just apply to insurance premiums. Let's look at something like annuities. A pretty typical commission is around 7%. So on a $500,000 annuity, that creates a total commission pool of $35,000. Now, here's how that 35 grand gets split up. A 40% contract gets you $14,000 from that one deal, but an 80% contract, that's $28,000. Think about that. That's a $14,000 difference on a single transaction, and it all comes down to the comp model, not how hard you worked. Okay, so we've looked at the math for a single sale. Now let's zoom out and take a look at the bigger picture, how different business models actually work. In a more traditional model, you might be limited to just one company's products. That can make it tough to help a wide range of clients. A more modern platform, on the other hand, gives you access to a bunch of A-rated carriers and different solutions. This means you can help more people, and the whole system is designed to grow year after year instead of feeling like you're on a hamster wheel that resets every January. But here's what really sets this kind of approach apart. You're not just limited to the sales you make yourself. You can earn from the work you do, sure, but you also have the option to earn by building a team. And that's the real shift from just making an income to actually building long-term wealth. And that idea brings us to two really distinct ways you can grow in this business. So think of it this way. Path one is production. That's the income you earn directly from helping clients. It's super important, and it's where everybody starts. Path two is leverage, building a team. This is how you create something that can produce even when you're not the one doing all the work. It's how people build scalable, long-term wealth that doesn't totally depend on their own time and energy. And what's really cool is that you get to choose your path. You can focus just on being a top producer yourself, or you can expand into a leadership role, or go all in and build a big team. You can grow at a pace that actually makes sense for you and your goals. Now, beyond your own sales and team building, there are other ways the system is designed for long-term growth. Let's touch on those real quick. So, as your team grows, you can also earn something called overrides. It's just a small percentage you get on the business your team writes. It's not about taking money from them, it's just how the industry compensates you for all the time and effort you put into training, supporting, and developing your people.
And for those who reach the very top contract levels, there can be additional bonuses that are tied to how the whole agency performs. Now, these aren't quick wins. They're long-term rewards for people who decide to build something really substantial.
There's also something called POP, which stands for the Partnership Ownership Program. You can think of this as a long-term leadership incentive. It's a strategic bonus for people who want to build something truly meaningful over, say, the next 5 to 10 years. If things like ownership and leaving a legacy are important to you, this is something you'd want to ask about.
So you've seen how the math works and how the business is structured. So what happens now? What's the next step?
Well, if you're exploring this space, the next step is actually really simple and completely pressure-free. It's usually just a quick 15-minute chat to answer any questions you have. And hey, if we both feel like it makes sense after that, we can schedule a full overview so you can see everything for yourself. No obligations at all. And I want to be super clear about this. The goal of that conversation isn't to convince you of anything. It's just to give you clarity, so you have all the information you need to make your own decision.
Because at the end of the day, it all comes down to this one simple question. Does a model like this align with the future that you're trying to build for yourself? If it does, that's great. And if it doesn't, that's totally fine too. At least now you've seen a different way to think about your career. Thanks so much for your time.